Can I finish on a regulation question? Because last time you were here,
Sure.
you said, Brian, I like Bitcoin because it has low aspirations. I always quote you to people, Michael. And, we've seen that the SEC has come out and said, look, it's a commodity. And then they started calling out other cryptocurrencies, if you will, and calling them securities. Um, what's your take on this? And I've heard you talk about this before. There's only a couple proof of work mechanisms that you think could even potentially be qualified as commodities, but the other 20,000 coins on Coin Market Cap are securities. And if that's the case, then they're going to have a problem existing in their current form. Can you just speak on your thoughts on this?
Yeah, well, look, the professor here is Gensler. He taught the course at MIT in
I
2018.
watched the
Anybody
whole
can go on
thing.
YouTube.
I watched the whole thing,
You
24
and me
hours.
both.
Yeah, and
You and me both.
he's smarter than people realize. He understands the tech.
In my opinion, he understands it better than most of the crypto entrepreneurs
Yes.
understand it.
Yes.
And what he said is the vast majority of the crypto tokens are securities. And the real fundamental first principles issue here is if you want to create a commodity, it needs to be a substance with energy content without an issuer. Okay, like a bushel of corn, a stack of lumber, a gold bar, right? Wheat, natural gas, gasoline, pork bellies. These are commodities. There's no issuer. You can create some, but there is no central group of programmers that can get up in the morning and say, we just made pork bellies non-edible. We just doubled the density of gold. We just made natural gas stop working, or we just doubled, the heat content of it. You can't change the nature of the thing. And it needs to have energy. If I take any commodity and I extract all the energy content from it, I take an orange and I remove 99.95% of the energy from the orange. What do you have? You have an imaginary orange. You have a security. If I take away 99.95% of the oil in a barrel of oil, what do you have? You have an imaginary barrel of oil, right? If you want to convert a commodity to a security, take the energy out of it. Now, there's one other aspect, which is it controllable, right? Like you need to not have an issuer. So the challenge with most of the cryptos is there's an issuer, there's a promoter, there's a small team, and they've got a roadmap and they're doing hard forks and they keep upgrading the roadmap. And if you have a software engineering group that keeps changing the protocol, that allows them to make material changes to the protocol. Like if I change from proof of work to proof of stake, I murder all the miners, right? All the Ethereum miners got wiped out. Billions and billions of dollars of economic damage. Did they get a say in it? No. Well, if they didn't vote on it, why is it happening? Because the programmers control the protocol, not the miners control the protocol. If a bunch of people could get together and vote to make all of the wheat in Asia non-edible, it wouldn't be a commodity, right? If I had a switch where I could change a program and make all your electricity not work in the UK, it wouldn't be a commodity. It would be a security. And I think Gensler's point is, from an ethical point of view, if one group of people get to turn off or turn on the functionality of the entire system for the rest of the world, then the investors are relying on the efforts of others. They're relying upon the group that controls the protocol. And if you're going to actually be able to turn off or, crank up the staking yield to 10% or crank it to 0 or lock somebody up for a decade, or give half the people. What if I just give myself all the tokens and I give you none of the tokens, right? I make yours not spendable and mine spendable. If you have that kind of power, you're running a company. It's a security. If you're going to sell it to the public, you have to make a full disclosure about who has the power, and you have to make continuing disclosures. That's what a public company does. Google does it. Apple does it. MicroStrategy does it. Microsoft does it. You're running a company. And if I had intention to give myself all the shares of stock for the next 100 years, right, I kind of have to tell you I just did it, right? I mean, and if I did do it and didn't tell you, right, there's the issue. So the obligations of disclosure for security are orders of magnitude higher than for a commodity. So coming back to this issue of crypto, well, the idea of Bitcoin was, how do I create a protocol that's fair and equitable that I give as a gift to the world that no one can control? If you're going to do it and you understand thermodynamics, and if you have any sense of genetics or biology or physics, you realize you need to be very humble in your aspirations. Like Satoshi's monetary protocol, it was set in stone. It was January 3rd, 2009. They released it. It circulated till Pizza Day for 500 days without any value, right? They fixed a couple of bugs, but they never changed the 21 million. They never changed the block rewards. They never changed the monetary protocol. Materially, it's the same protocol, unchanged, and it's never a hard fork. All the changes were soft forks. The whole idea is I have a protocol. It's a genetic code. I'm releasing it. How long do you expect that protocol to exist? Well, how about like 100,000 years? How about 1,000,000 years, right? The idea of the protocol was to go forever, right? Between now and 2140, you release block rewards. And after 2140, the network runs on transaction fees. And the intention was, this is going to exist to create a shared immutable ledger of 21 million coins, subdividable to 2.1 quadrillion Satoshis. That was the idea, no other idea. It'll be protected by the generation of SHA-256 hashing, encrypted energy, right? And that's what makes it a digital commodity, the fact that it uses physics, hardware, and energy. And if you had a software development team and they had the power to change it to something different and keep changing it, we're going to change the block rewards every year. We're going to turn off the mining. We're going to convert to, this protocol, that protocol. We're going to lock up those coins. Well, the problem is you now have an issuer. And if you have an issuer, you have a software engineering team. It's a software company. And it's not unethical to create a software company. It's unethical to sell the equity of a software company to the general public without full and fair disclosure. So the failing is you've created a company and you intend to keep changing the software continually, and it's a small group of people that get together to do it, and they do it to the detriment of somebody else. There's a winner and there's a loser. The losers in the Ethereum merge are the miners who lost everything, and the winners are the stakers and the people that can control it. And then you've got the general public that have money locked up in the staking contract, but they can't get it out. So when are you going to get out your staked ETH? 10% of the ETH is staked, it's locked. When are you going to get it out? Nobody knows. Who controls that? The software engineers control it. Well, what is that, right? That's like a small group of people, right, are controlling the entire network. That's the definition of an investment contract. When you have the general public and making an investment of money dependent upon the efforts of others. And so I think the elephant in the room with the crypto world is most of the cryptos are attempting to do very intricate things. They want to move fast and break things, and they want sizzling functionality and performance. I want to do DeFi contracts and the like. And yeah, those are all sexy and fun and fine. But if you're doing them in a decentralized fashion, you have to release a singular protocol and give it to 100,000 different groups, and then they all have to run the software, and you can't change it anymore.
The greedy bankers are about to do it again. In 2008, they crashed our financial system and nearly bankrupted the entire global economy. Then they received trillions of dollars in government bailouts. And after, they demanded fat bonuses paid for by you, the taxpayer.
It turns out the banks haven't just been screwing the American taxpayers, they're also screwing over their investors. Turns out the banking industry is the worst place you could put your money, despite enormous taxpayer bailouts.
Now the bankers are back, to take away your financial freedom. They lie and tell you that cryptocurrency isn't safe. They try to make it illegal for you to choose how to invest your hard-earned money. They lie and say cryptocurrency is used by money launderers and criminals. But look at the record. It's the banks themselves that launder hundreds of billions of dollars every year to the biggest criminal operations in the world.
Leaked documents have revealed how some UK banks have helped criminals, money launderers and Russians under sanctions.
American authorities discovered that the Sinaloa cartel moved $881 million through HSBC accounts as bank officials turned a blind eye to the illegality.
The bankers lie and say cryptocurrency is not a real investment. Meanwhile, the smartest CEOs in the world are buying billions and billions of it. The truth is that banks lie about cryptocurrency because it makes them scared. The banks take $9 trillion per year of your hard-earned money, and they are worried that they will finally be exposed. They're scared because crypto means they can no longer control your money, which means they can no longer control you. They are scared because you might actually understand your money and intelligently decide what to do with it. Now is the time for us to come together, fight back, and take control. It's time to educate ourselves, our families, and our communities. Because financial education means financial freedom. We know that cryptocurrencies will help us build the new decentralized financial system of the future. A banking system that is of the people, by the people, and for the people. A banking system where access to finance is a fundamental human right. A banking system that is free and fair and welcomes all humans on this earth. The DeFi revolution is happening. We, the people, can no longer be fooled. We choose to take control of our finances. We choose to take control of our freedom. We choose to take control of our future. Join us, and let's take back our financial freedom forever.